Okay, welcome everybody to this evening's AUDJPY webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trading Live Market Analysis. Before we get into that, just to give you a heads up from me this week, tomorrow I'll be going through how to become a consistent trader. That's our education webinar for the week, tomorrow evening at 7 p.m. and then more analysis on Thursday evening at 7 p.m. from me. If you want to join me for those webinars, just register your interest on our webinar registration page. Now, before we get into tonight's webinar, if everybody could read through the disclaimer. And if you're on our YouTube live stream, I can't see the chat, but you're more than welcome to watch or join us in the webinar. I've given you the link there. For those in the webinar, you can use the chat box or the Q&A box to talk to me. Right, so just give you a moment or two to read through the disclaimer. All right, let's move along now. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY Securities. And I'm a full-time Forex trader. I've been trading in the Forex market now since 2005, so almost 20 years. Mentoring for more than 10 years. And if you want to contact me about the webinars, just send me an email. My email is there on screen, duncan.cooper@acy.com. If you want to connect with us through the week, you can do that at the website, acy.com. Go to the Market News tab. We're our YouTube channel at AUDJPY Securities Australia. And if you want to connect with me personally, my Linktree page is there. You can get my links there. And if you want to get access to the charts I'm using in MT4, just contact Nathan.bray. He'll only be too happy to set you up. And for those in the webinar, I'll put his details in the chat there. All right, so first up this evening, let's get into the news items for the week ahead. So I'm just at forexfactory.com. Time showing my time, Queensland, New South Wales time. So this evening at 10:10 p.m. for Canada, we have BOC Governor Macklem speaking. Now, a few days here, it's going to be rather volatile. Getting into tomorrow, 4 p.m. for GBP, we have, beg your pardon, 4 p.m. for GBP, UK, we have GDP month-on-month figures. 10:30 p.m., first big item for the week for the US is core PPI month-on-month, CPI month-on-month, and CPI year-on-year. So tomorrow evening, it's going to be very volatile at 10:30 p.m. Inflation figures coming out. We're already maybe expecting a rate cut this month, so from the Fed. So market will be definitely looking to see what these figures are. Then getting into Thursday, 10:15 p.m., we have the Eurozone May refinancing rates, monetary policy statements. Here at the moment, I'll do the maths right, they're expecting 0.6 of a cut, which seems a bit of a funny number. Usually it would be 0.25 or 0.5, but anyway, expecting a rate cut there of 60 basis points. My maths is right, which I'm pretty sure it is. So market will be volatile. Monetary policy statement at the same time. Then at 10:30, we have the US core PPI data entering into the mix, and unemployment claims. And at 10:45, we have the ECB press conference following the interest rate decision. So we have further US inflation figures, Eurozone cutting interest rates potentially here by 0.6. Going to be very volatile there. So, you know, round up these items Wednesday and into Thursday. I won't be trading until after the events. I'll have my levels that I'm looking to trade around. If price gets, you know, a volatility spike up to a level or down to a level that I'm watching, then I'll be then honing in for a trade entry. I won't be looking to get in, especially on the euro dollar, until that's past tomorrow evening. All right, so those are the items coming out that you really need to watch for, so make sure you've taken note. Let's get into the charts with those things in mind. All right, so last week I was discussing the idea that we might get, this is my day chart, a 79% retracement down here back to monthly support. And that came in on Friday with job figures. Job figures were, general terms, better because unemployment rate dropped. And ultimately finished very positive for the day. And we're putting in a high bottom here. So if we move to the weekly chart, then what we're going to see here is, whilst we were negative last week, the week before we reversed, we really just retraced back inside the weekly range of the week before, back down to monthly support. You can see all the support along here since January 23. And, you know, it wouldn't surprise me that we're getting support down here now to move back up the range. And especially on the day chart here, if we move back above this high so that we have a definite uptrend. You know, I said watch for a dip back down on supports. If we break above the high here, then I'd anticipate we're moving up. Look for the next high bottom to form to continue move up the range. So with that in mind, I would anticipate the inverse look on the pairs to the US dollar, depending on the news items that get delivered this week. So whilst the inflation may be ticking down in the US and of course an interest rate cut is coming, other countries are cutting their rates. And we may have seen, you know, a very strong sell-off versus the US dollar, you know, as we look at the dollar index, but quite clearly we've traded down to supports. Long-term support here, are we going to be moving back up long term? That's, I think, what we should be maybe anticipating at the moment. I think until we see a clear break below here, 165, then this downtrend may have come to an end here at the moment, and we may well be seeing a move back up. I was maybe up to at least back up to 103.96 here, where we initiated the breakdown, the range. All right, so bear in mind the structure there of the dollar index. It is starting to move back up now on the daily. S&P 500, notably on the S&P 500, following last week's decline, we're putting in a lower bottom to now a lower top forming. Big drop last week. In contrast, though, if we go up one more time frame to the monthly, we had a monthly rejection in that big decline that we had. And it was a very positive rejection, almost like a hammer, really suggesting that maybe we're actually going to go higher. You know, just based on that chart, you'd say we're going to go higher from that candle. So we might see a movement back down the range. I think really it's critical for the sellers if we are going to continue this weekly downtrend that we can see on the chart. We really need long term to be able to move below this area. If we can't move below 52.81, that may be where support comes in and then reverse back up. If we do break below here, then it's all on the start of maybe a bear market. So we did have a very healthy rejection back up come the end of the month, last month. So whilst the weekly chart is showing a lower top, lower bottom, I don't know really if that can hold itself. We'll have to wait and see what data comes out this week from the US. To the daily. Now, if we are continuing down, I will be monitoring this range, looking for a 62% retracement back up to broken support to be resistance. So that would be the level just in here at 55.44. Can price rally back to there, hold for the next decline? That's what I would look for. And then the danger area for support would be down at 52.81. Okay. All right, that's my thoughts on the S&P 500 at the moment. All right, let's get into euro dollar. So to the weekly first. Weekly chart theoretically is in an uptrend. Higher bottom, top. This is a retracement at the moment of the weekly uptrend. However, we have had a significant failure at this high. We had railroad tracks, and last week we came up on the job figures to tag that level. I said last week, watch that level, that area, right up there on the volatility of the news, and then failed. So whilst the weekly trend is up, what I'm looking at for support are the weekly levels. There's a high here and there's a high here. So there's 110.17 for support. There's 109.81 for support at the moment, as we maybe potentially have another week down. All right, so what happened with the rally on the non-farm payrolls is it came up to retest that weekly high, gave you a lower top formed eventually. And that was a great level to look and search for a reversal. And now we're getting a bit low down within the swings. So we've moved down. Yeah, up here, or as it started to sell down on Friday, was the time to get in, because now we're getting into support. Support could come in at 110.17 for a bounce, or moving down to 127 extension, which overlaps with 109.81. So we're getting into the latter phase of the current move down before we might want to see another rally and then a move down if we're continuing down this range. So in terms of selling at the moment, we've already done it today. The level I was going to suggest, as I was updating my charts earlier today, was this high here. We broke below that yesterday, and we've actually moved back up to target. So 110.47 is resistance. You can see we've already come up on the 4-hour to target. So if we did revisit 110.47, you could look up there. At the moment, we're almost trading into last week's low, which it's not an ideal level just to trade into, because we might get a bounce in here. So trend is to the downside, but you need to know where to pick your battles just to sell. So today, if we do further, if we can get back up the range a little bit once more, look at the central pivot point to 104.70. Central pivot points here at 110.52. If you haven't already got short, it's a bit difficult at the moment because we're trading into support, but the trend is down on the daily. So that is the direction to be in, but you want to try and sell rallies if you can, not selling into last week's low. So you're just going to have to watch to see if we can maybe come back up to 104, 110.47 up to 110.52 again. And does it offer another opportunity to maybe look and structure a sell down from that level? I just want to go back to the weekly, and it's important to know where we are within the range of the weekly chart. That's the most weekly uptrend range. Jump to the daily, and logically, we'll often pull back to the 62 or the 79% level or area. So at the moment, I'm anticipating that over time, we're going to come into this zone. We may come down into filling this imbalance down here. So most immediate bias is to the downside. So look to structure some sort of sell rally. Today, 110.47 has been resistance. And I anticipate we're maybe moving down into that zone. All right, Euro Yen. Now, all these yen pairs is really the same kind of question. So I'm just going to say it once. The monthly trend is up. I'll probably say it more than once, but I'll try not to give you the same analysis on all pairs. All the yen pairs are showing this kind of structure: higher bottom, higher top, big sell-off to the 79% level, rejection. And this month on the Euro Yen, we're coming back down to that level. Now that level could hold to move back up. What's against that is that the weekly trend is now down. So the monthly is up and the weekly and day trends are down. So there's conflict about the biggest trends as we work through the lower trends. Which way are we? Are we ultimately going to keep continuing down and break the monthly trend, or hold at 79% level here? So there's a weekly area here. I think it's a daily area more than a weekly area, but that given said, it's an area of support there from previous. Rejected 79% level on the daily. And we're in the same area right now. Day trend is down. So whilst we may get a little bit of support here, we may just bounce up before we break down and through. So I'm just going to go with, as the daily and the 4-hour charts are down, that's the most immediate direction, unless we see a reversal that we think's occurring down at 79% level. So day structure is quite clearly down, so I would look for a rally back to 160.018 to look for a short. Now, if you're more bullish, we're quite clearly at support. So I think if I wanted to get bullish, I'd need to see the 4-hour chart turned up at the moment. All right, so at the moment, I would look for price to move back up to 160.18 and try and structure a short there to continue with the overall trend structure on the daily. 4-hour, you can see it's sideways here. Now, to get up to 160.01, we would have to turn the 4-hour chart up. But if you've got the bullish frame in mind here, 158.07 support and the 79% fib, I'd want to see, first of all, this structure turned up, so break above here. Then maybe we could get another retest of this area. So if another retest occurred and it held, that would give me more positivity to look for the possibility of a buy here to move up. Now, the buying pressure may only get up to 160.01. If it was to fail there, then I would look for the opportunity to structure a trade to the downside because the daily trend and the weekly trends are down. Okay, so difficult trading. I think the euro yen and the euro dollar ahead of Thursday because of the interest rate decision. And this 158.07 level that we're getting from the day chart, over here, this level could actually become a resistance over the next 24 hours. So watch for that. So if we do, we have tried to go underneath it once, twice, but if we did start to see a nice shift down, can you see that become resistance intraday to maybe trade further down from? So at the moment, we're actually just selling down on a 15-minute chart to support the 79% fib. So from a buy side perspective, if you want to get real cute, buy, you can put your stop below here, or more prudently, put it underneath here. And if we come up to the high here, take your risk out, and then maybe we are going to be moving up to the 161 level from here. All right, so what do you need to see here, maybe as a trigger to buy? Holding at central pivot points, holding on top of 158.07 supports. After finding support earlier in the day at the bigger 79% level in here. All right, so just intraday there, it's looking like we just had a pullback to support. Okay, euro pound. Now, this is my marking from last week where I was hoping price might give one more opportunity to get down into there. Didn't quite, and really price action at the moment on the euro pound is pretty ordinary, especially there on the 4-hour chart. On day charts, it is putting in a higher bottom here, so I'm anticipating this is moving back up the range at the moment. But I would need to see some form of pullback back to the 4-hour chart. I'd look at the whole range of last week, so that's last week's low to just a slightly fresh high this week. And then look to the 79% area and down to last week's low. So between 84.12 to 84.03, down there, where last week we quite clearly showed support. We'll support one small offer there for maybe a continued move up. Just trying to get my head around the euro and the pound. If the euro dollar sells off this week because of an interest rate decision, so the euro gets weaker, then of course we could move down through support. But that will obviously depend on, does the euro dollar weaken against the US dollar more than the pound? So we'll have to wait and see if that interest rate decision really reflects on the euro pound. Pound dollar. Now it's a little bit weaker than the euro dollar in terms of its current structure because we have moved further down below last week's low than on the euro dollar. So, but structurally it's looking the same. The weekly trend is up, but we're failing at a clear area of resistance up here. That was the previous year's high. So we're failing at the previous year's high, and well, the weekly trend is up. So is this just a retracement or a complete failure up here? So I'm just again using weekly levels of support. Support could come in at 130.44 this week, or if we break below there, the next level is at 128.93, which does overlap with the 62 retracement level here. So that would be a much more obvious level to find support maybe later on this month, or maybe a buying opportunity if we were to pull back within the range of the weekly uptrend. But for now, as we move to the daily, trend is just putting the lower top bottom. So we're just getting into the lower end of the most immediate move, although it could move a lot further down before it wants to significantly rally. So 79% retracement, 127 extension overlaps with this weekly high here. So we may well see a bounce there, and we're only almost 40 pips away. There's not a lot of room to get short. If you're getting short, you want to get short looking at this little area here to be resistance. We could drop to that on the 4 hour and get the risk out by the time we hit support, and hopefully that can break, because we do have a very strong move up that was, and there's an imbalance here through all this area that potentially needs to be filled. So we could see, as I was saying before, move down to this area, which is the weekly high and the 62 level at 128.94. We may well see that area all filled in through the month. All right, so 79% retracement on the job figures. Has actually turned the 4 hour up in the day, so I don't really like the idea of a short at the moment. I would much prefer, in a perfect world, sometimes when I'm looking at a pair, things aren't perfect for me. We're moving down. I much prefer to see price hit this level and then come up for like a 62.79% retracement of whatever this range is, and then look to initiate the short on the sell of the next big rally. Okay. Now we don't have that at the moment. It may not offer that either. And that upward move that we've had today may just be a false break of the 4 hour trend. So if you're not sure and you don't want to wait for that, you could just be on the 15-minute chart looking for the 3087 level up to 3100 for short. All right. So in fact, the central pivot point is just above 138.07. So 130.87. So I would look to this area at the moment. If you want to get short, looking for a setup to get short in this area, central pivot point, 130.93 to 130.100. Now in a strong trend, and we're obviously downtrending here on the pound. Yesterday, we couldn't spend any time above the central pivot point. Spent a little bit of time above and then reversed back below. So we might just see another retest of this area, but in strong moves, up or down, in this case down, we don't spend much time above the central pivot point. Yesterday we couldn't. So maybe we might just see another touch the central pivot point and then that's it. You can see through New York yesterday that 131 here was being resistance. So this is why that's just come through and tripped some stops above those highs and then moved back down. So quite clearly 131 is where the sellers were positioning themselves yesterday through New York. That could be well where they position themselves today. So any revisit of that area, look for the opportunity for reversal. If we do move higher today, I would look at 131.42, which is a previous weekly high that we false broke. You can see here yesterday was pretty much the high of the day. All right. Okay. Pound yen. All right. So as I was saying on the euro yen, the monthly trend is up. Big rejection at 79% level and a monthly high there at 186.75. Weekly trend is down, lower top forming. Daily trend is down. On support at the moment, I'm a little bit reluctant to go against the overall trend. I'd much rather, like I was just saying on the euro yen, if we can come back, rally back up to broken support. So here's support, 189.497. I would say, if we have a rally back up, what happens there? Does that become resistance for a move back down? That would be the area I would watch for a reversal back down this week at the moment. As I was saying last Thursday, we could move higher, back up to these highs. That would form like a left shoulder, head, right shoulder. That's at 190, 196, but we're a long way away from that at the moment. But, do we come back up to this level and fail to move down, or a head and shoulder pattern up here at the 79% level? So a few levels to watch through the week. All right, I would much prefer the high level, but we'll have to wait and see what the market can do. I don't think on the euro yen we quite had that pattern. No, we don't. All right. Aussie yen, here's the monthly chart. Like I've been saying before, 79% rejection with an uptrend. Not able to hold it, try to get above these monthly highs to the left on the rally, but wasn't able to hold it, and that's turned the weekly trend to down, lower top forming. Daily. I would allow it to rally and look to sell a rally. Could come back up to 97.66, the monthly high area. That's very close to the 62% level. Could come up to the daily level, which is a more recent reference point, 97.25.8. But all these yen pairs, I would look for trade with a day chart trend, because that's the most immediate trend that's formed in line with the weekly downtrend. And look to sell a rally. So we need a rally at the moment. So as we're saying, we could see a head and shoulder pattern if it had a strong rally. Left shoulder, head, 79% level here for the right shoulder at 98.74. But I think at the moment I would look to the 97.25 to 97.66 area here. If we get a rally up there this week, back up with inside last week's range, that would be the area to watch. And if you could get a good short just in this area, we may, this month, see a movement down to retest this low. We have next Friday, not this Friday, but next Friday, the Bank of Japan monetary policy statement. So it's not out of the imagination that we could see a rally for a lower top, then trade all the way down this way towards the bodge news, and maybe we're going to continue the overall reversal of the yen pairs. Okay. All right, Aussie dollar. So the big question on the Aussie is, from the weekly chart, is this going to operate within this range? If we are, you want to be getting short in the early phase of the move to maximize your risk to reward. All right. Daily, similar kind of structure here. We're probably at the 127 extension of the downtrend that's been forming. Lower top, hit the 127, Might go a little bit deeper because we didn't quite get to the 62 level, but I would suspect at some point we're going to get some form of rally this week. Unless the news, makes the pairs tank this week. At some point we're going to we should be having the expectation that now that we've moved down once more, we're going to see some form of a rally at some point. See here, we had like a 2.5 day rally here of sorts, at least a 2 day rally up here to put in the lower top. Maybe we're going to get the same sort of reaction here. And, putting a fib in now from the lower top to the current price action low, keep dragging it down if it moves down and look for the next rally. So these two weekly highs, one here and one here, that area, so it's 67.04 to 14. We could see a rally into that area zone. If we went down a little bit more, the 62 level would overlap as well. So, and we've got broken day support. So there's a whole area here that if we were to come back up to, it's really 66.97 up to 67.14. It's about a 17 pip range there. If we moved back into that area, I think that's where you should be looking to continue to look for a short, and we could be moving down to at least this area of support at 65.75. And yes, long term, we could maybe revisit back down here. We'll have to see. Right, 4 hours getting a little bit consolidatory, so maybe just looking like it's going to pop back up. Don't forget where the most immediate trend is on the daily is down with that big failure at the top of the range. So I would be looking to structure some to the short side if we got back into this resistance area. 66.97 up to 67.14. New Zealand yen. There's your monthly uptrend, 79% rejection. Just holding on top of monthly support here, 88.16. Weekly trends put in the lower top. I suspect on all these yen pairs, we're probably going to do a retracement back up within the range of last week's candle. So last week's candle range is here. Got a weekly area of resistance over here to the left, an area here. So logically, I said this last week, this could be left shoulder, head, right shoulder, down. So I would just be watching at the moment to see if we get the rally. At the moment, it's trying to set on this level of support, maybe to get back up, but 88.16 could turn to be resistance. If we got a very shallow rally and then drop below 88.16, at some point I would watch 88.16 to be resistance intraday to trade down. Don't think this is for me, this is too overextended to the downside to trade this level as resistance. I feel like it needs to rally back up. Now, after having such a strong move down, it's due a rally. So I'd much prefer to trade against a high level of resistance at the moment. All right, so watch to see if we can get a rally back up to the 90.21 resistance, 89.94 to 90.21 resistance area there with a 62% level. New Zealand dollar, similar to the Aussie. Are we just going to be in this range? Have we failed at the top to move back down to the bottom? Just contending with this weekly high area here at the moment, 61.53. We're below it, just fractionally above it at the moment. I mean, if you're more bullish, this is support. You could be looking to get a long trade up. But that would be in the face of the most immediate trends. Personally, I would look to this range now. Allow it to rally to the 62.79% zone. There's the 62.79% zone, which right smack in that area, we have these two double top resistance areas here. So as I said last week, this was an area to maybe look for resistance. It is most definitely this week too. 62.14 up to 62.21. All right. And there's a little 4-hour resistance area in that level too. This little area here. Could, see, people say this isn't textbook head and shoulders, but there's resistance. Then we false break. Then we drop down. Will we come back up to this area? Like so. All right. I'll look up. There's an imbalance on that 4-hour candle too that maybe needs to be filled through the week. So it would not surprise me to see a logical rally from this weekly support area at the moment. But with day trend clearly down, look for this imbalance to fill. So there's the imbalance. So, 62.04 up to the 62.21 area. There's 4-hour high here. There's another 4-hour high here. Okay. And most, pairs to the US dollar may move up over the next 24 hours as we wait for the CPI, because we sold down from the job figures quite aggressively. Then we got the next big news event coming in. So anybody that got short maybe Friday into Monday, maybe taking profits, and we may be just moving back up before the next event. Okay, dollar Canadian had a very aggressive move up from a 79% retracement here on the day chart, just coming up short of what was broken weekly support. But as I've been saying, now we are a daily uptrend forming. Been staying on the monthly chart, we're an uptrend. Yes, we had an aggressive move down, but it's really just back to 62% retracement of the range. We have a higher top, move from a higher bottom to a higher top. Is this going to be another higher bottom, which is coming in at weekly support, 62%. Now, I know structurally the weekly trend is down, but the monthly is up. And to get that 62% retracement on the monthly, the weekly had to turn down. So that could be a false change of trend. And then we could be actually turning the day chart trend back to up now to see a move all the way back up to where we came from. And are we moving through all these highs to the left? With if the US dollar is starting to bottom on that dollar index at the monthly support area, we could see this continue up. All right, so the daily is up. It's just headlong into resistance at the moment. So what we may need to see, we put the fib in. We've had a 79% retracement. We may need to see the fib tool run out. So we've pulled back to the 79% level here at support. May need to see this move up. Have I got coming through resistance to the 127, like so? And then we may then need to see the next retracement occur, which could see another move below the resistance area. Pull back to 62.79 before then the next leg up. All right. So I'd be a lot happier if we just actually break above resistance and then have a pullback. So more to the tune of, we really have a larger move up, maybe like so. All right, so we and then pull back to 62%, and old resistance becomes new support once more to continue that move up. All right, so that would be my preferred outcome for price to start to form. It's going to need more than a few days to do that, because quite clearly at the moment we could just hit resistance and fail and then move back down the range. But as we're developing an uptrend, I'm inclined to give it the opportunity to continue and prove itself and then look for a pullback. So we'll have to wait and see how it's going to prove itself. There's this imbalance here that potentially needs to be filled. So a move up this way to fill that would be great. And then do we pull back to support to be support? Now, on the other side of the coin, because there's always more than one side of the coin, it is, we could simply come up to 135.88 this week. Let me just refresh my memory on the news. Like today, we do have the governor from the Bank of Canada talking at 10:10. We may see today a spike into 35.88, and then we hold, and that level could offer you an intraday reversal level. So you can see at the moment we're selling off a little bit. So if you're more to the short side, you could look for a movement back up to last week's high and 35.88 weekly resistance. And if you start to see it reverse up there today, you could look for a short back down the range. Didn't do much yesterday after the strong move up. And, you know, we may just stay range bound today as we wait for the CPI figures. But before we get to the CPI figures, maybe price action doesn't want to move above 35.88, and 35.88 could be a good shorting level ahead of CPI. And then, you know, we'll wait and see what CPI brings. But with that day chart uptrend starting, we may well see price eventually move through 35.88. Right, dollar franc, go to the weekly chart. We are getting a lot of support down in this area. I've been saying that historically we're very low. So we may get historical support coming in to move this up. You know, if the dollar index is going to get support and the euro dollar is going to move down, then this really should then correlate to the upside. So weekly at the moment is still down. 1 week, 2 weeks, 4 weeks, we're really struggling at 84.32. So daily at the moment is still down. Personally, though, I think this is still down, but getting a lot of support down there, 84.32. Structure on the 4-hour chart we've turned up, so my overall general bias would be more to, as long as the 4-hour chart can pull back and hold the 4-hour trend, which is up, I would look to 6-2 supports down to the 79% level, which overlaps with last month's low. So supports at 84.32, 8400. So there's just a 32 pip area there. Is if we do come into this area, I'd much prefer a retest of last month's low. Look down at that deep level there at 8400. So personally, I always like 79% level. So 8400 down there. If we got down there and started to hold on the 15-minute chart, we could well see some bullish structure starting to maybe form there on the 4-hour to maybe move back up the range this week. All right. I know it's counter to what we're seeing on the daily, but we're not, this 84.32 level, you know, even if you just watch the 4-hour chart and we come down, if we come back into this zone and then close back above 84.32, it's once more proving you that we're getting support there to move back up the range. All right, dollar yen. As I was saying before, we've got the BOJ monetary policy statement a week on Friday. At the moment, this is the 4-hour chart. That's last month's low, which we've been a fraction short of on this move down. So yesterday we put in a bit of a reversal. It is just at the moment wanting to hold below this level of daily old support, 143.4410. But it's not yet wanting to trade below last month's low down here. So that is obviously being eyed by the market as maybe a potential bottom. So we could actually have a double bottom here. I think what we need to see over the next couple of days is, can we get a nice close above 143.41 here? Because we're just waiting for news at the moment. It's really doesn't want to commit below 141.69 and seemingly doesn't want to commit above 143.41. So at the moment, just from intraday, 143.41 is the shorting level and the support levels at 141.69. But moving forward from a long-term positional play, if we start to close above 143.41, that's going to maybe start to confirm this double bottom and we could be moving back up to range. So that's worth watching for. For our chart, we're just holding at that resistance level really. Already really missed the 15-minute. Reversal there. You can watch for further in the day. Does 143.41 further offer resistance? You can see it's offered resistance whilst we traded through here in Asia once, moved back below twice. Then we moved above. So later in the day, do we once more come up, hold, maybe to move back down? But as I say, if we get a good close above 143.41 on the day chart, I would start to maybe anticipate a double bottoms forming. And when we get the CPI data released tomorrow, if we once more, I'm going to be watching this tomorrow on CPI data release. If we come down to 141.69 area tomorrow, then we start to reject intraday, then may offer another opportunity to get in at the bottom area at the moment. And Lawrence is telling me that's also a head and shoulder pattern. I'm not sure what pair you're talking about, but maybe on the Canadian dollar. Back on here. Was it the Canadian dollar? Dollar franc. Was it this left shoulder? A little bit of a head here, right shoulder? Yeah, dollar franc. Yep, potentially. All right, so two levels to watch there on the dollar yen. This, I mean, if we do revisit 141.69 with the CPI news and it holds, as I've been saying on all these yen pairs and the monthly chart here, until we can break below 140.24, we're still holding the monthly trend. So this could be a deep dip, finding support, forming a daily chart double bottom to trade all the way back up. All right. So if we do start to see a bottoming out process, if the data starts to come out this week with CPI, if it doesn't drop as quickly as anticipated, the market's maybe not going to anticipate as many rate cuts. Interest rate differential on dollar yen definitely is in favor of the dollar rather than the yen. So we could then see people that have got short dollar yen wanting to cover positions. All right, let's finish on gold. Really, my commentary is the same. Long-term uptrends, daily chart, area of resistance here becomes support countless times. 24.83 down to 24.77. Last 2 days have traded there or almost there. So for our chart, so that was Friday. After set on Friday was probably here. That was Friday just short, and then into Monday just short. So any revisit of 24.83 down to 24.77 is the area to watch. this area here. That's where the buyers are. Now, with the volatility of any news that's coming out this week, we could obviously spike below, like we did here, and this area here. But really, that's the zone. That's where, if you're wanting to get long gold, because the longer term trend is quite clearly up, that's where the buyers are holding the market. So that's that would be the most ideal spot to try and trade. We are a bit range bound, as you can see, and right now, the range is kind of there. We're kind of in the middle of the range. Middle of the range is probably there. And with that in mind, it's not the ideal spot to buy. Of course, to the short side, we're struggling right up here at 25.29 to 25.31. So if you want to short, that's the shorting area to look for a reversal. But we're not there at the moment. But as we know, the long-term trend is up. So if we're going to break anywhere, potentially we will break higher. And so then with that frame of mind, you want to be a buyer at support to try and trade the break of resistance for a further move higher. So that would be the logical look to see if we can trade down to support to move back up here. Can we break out? All right, so it's going to be a little bit difficult this week with a few news items coming out from the US inflation data tomorrow, Thursday. And of course, on Thursday, the Eurozone interest rate decision. So Friday was actually a great day to look to get short on the pairs to the US dollar if you manage to take the opportunity, because now prices move down and all you should be risk-free, like on the euro dollar. Up here, weekly resistance on Friday was great. Now we're kind of in a bit of a support zone, so it's very difficult to get short, and it's maybe difficult to get long because the trend's down. So then you're stuck waiting to see what the news does. So there's always a good time and place to try and position yourself, and really last Friday was the best, most immediate opportunity. All right, so waiting for the next one. Right, so I'll leave you with that. If you want to join me in the week, just head over to the webinar page and register your interest. There's the link at the top. Tomorrow I'm going to be going through on the subject of how to become a consistent trader, taking you through the things that more of the boring things like having a trading plan, developing one, trading journal, forward testing your trading strategy, things I think that people don't want to do, working on their psychology, because people just want to obviously look at charts and take trades, don't we? But your profitability can certainly be improved by looking at these things and encompassing it within, the things that you do from day to day. So if you want to join me for that, just register your interest. That will be tomorrow at 7 p.m. and then more analysis from me on Thursday the 12th. Okay. All right, everybody. Thanks for that. Thanks for your company. Hopefully you got some value and some levels that you can look to trade around, and you've got a general idea of where I think the trend is at the moment. Just be aware of the news items coming out. All right, thanks everybody. Look forward to seeing you next time. Thanks, Lawrence.